Every candlestick tells a story. As a trader, you should be able to look at a particular candle and know the exact story that candle tells. If you can do this, it will be very easy for you to predict the market, find entries, and become very profitable. And in today's video, I'm talking about candlestick structure, how to know the exact story that a candlestick is telling you, how to use candlestick to predict price movements, and how to use candlestick to find entries. If all of this excites you, please go to like this video, go to the comment section and comment candlestick structure, and if you are new, subscribe and turn on the bell icon, because all I do in this channel is teach you guys how to trade cryptocurrency and forex market. Basically, there are two types of candle. We have the bullish candle and the bearish candle. The bullish candle, which is one on green, is called a bullish candle, while this one on red is called a bearish candle. The bullish candle is also called a buy candle. It is seen in the chart when there is an increase in price or when there are buys in the markets, while this bearish candle is seen in the chart when there is a decrease in price or when there is a sell in the market. Basically, as you can see, I will add some important points or some important part of the candle that you should know. This first part right here and this right here is called the wick of the candle. This particular place indicates the highest and the lowest points that price went to in a particular day, even the daily time frame. Please, you should know that there are different types of time frame in trading. If I come over to this particular session right and I click on it, I'm going to see different time frame. You can see the 1 second time, 15, 5 minutes, and if I scroll, I'm going to see the 1 hour. We will have the monthly time frame, and let me scroll. You can see we will have the daily, weekly, monthly. So each of this time frame, if you put it in any of the time frame, if you choose any of the time frame, the candlestick is going to tell you what happened at that particular time frame. You get what price did at that particular time frame. Right now I'm on the 4 hours time frame, and if I scroll down, each of these candlestick tells us price movement in the last 4 hours. Let me scroll to the next side. This particular candle tells us price movement in the last 4 hours. Why this other last 4 hours, last 4 hours, last 4 hours? So each of these candlesticks within 4 hours, and this particular one it has not closed yet, which means that 4 hours. Once 4 hours ended, yet a new candlestick is going to form. Understand? Let me use this big candlestick as an illustration. Right? So in this particular one, in the 4 hours that form this candlestick, price move from this particular point down here, and just if you look down to your right, I'm going to see 1.9586. Price move from that particular point and went to as high as to at this point 2.2531. And if I come look at this particular candle, let's see that price move from this particular place 2.3289 and went as down to as 2.218. You can see each of these candlesticks tells you price movement. So if I come back to this my image right here, as I said, this is a wick. It shows the highest point that price has gone to in this particular time we are using. In this video, let's assume we are using daily time frame. This this wick shows the highest point that price went to, while this shows the lowest point that price went to. Also, if I look at any of this candle, let's take. Okay, let's make use of a bullish candle. Let's make use of this particular one right here. You can see that though this candlestick move from 1.8 1.8284, look to your right, you're going to see 1.8284. And closes at 1.91 to the highest point that the price moved towards this particular place, right, which is about 2.1028, and the lowest point that price went to was about 1.8050. So the week actually shows you the highest and lowest point that the price went to in the market. Why this particular place right represent the open of the candle, why it represent the close of the candle. Now, remember I told you that a bullish candle represents by a signal there's an increase in price. A signal there's an increase in price in market. So if let's assume this is a daily time frame and this candlestick tells us price movement per day. Let's assume yesterday price moves and ends at $2 and today price went from $2 to $4. So today the place that the price went starts from today, it's called the open of the candle, while the place the high point where price ends for that particular day is called a close. So if price moves from $2 to $4, this particular place, initial place that price is before, is called the open, while the final point that the price wants to is called the close. So for example, in this particular place right here, if you look to your right, you're going to see 3.0465. This shows that price moves from 2.0465 to where? To 3.4994. So this is the open of the candle, the place that price starts from for a particular day, and this represents the close of the candle, the final point that price went to get. Remember I said this will be the highest point that price went to get. So if price starts from $2, there's a possibility that the price tends to go down to a decrease in price, but then the middle area that price moved from 3.039 to where 4.4 or 3.5, but the highest point that the price went to was just about 3.595. I don't know if you understand. Understand me? Let me know in the comment section. Now let me show you this yet. So in this particular candle right here, you can see let's assume this is a daily time frame. Price moves from where? From 1.9288 and closes where? 1.9556. This particular place is called the open of the candle. I don't know if you can see this. Let me zoom. So price moves from where? From 1.9198 and ends at where? 1.9535. This place right is called the open of the candle, while the top is called the close of the candle. And in the other candlestick that was from, price starts from where? Exactly where price ends before, which is what? 1.9591 and went to around 2.539. This particular place is called the open of the candle, while here is called the close of the candle, and this will represent the highest point that price went to, lowest point that price went to. So if you understand that, let me know that in the comment section. Now, I believe you have understood what open of the candle and the close of the candle means. In a bearish candle, it is similar. They are just opposite. Remember that bearish candle represents sales. It's always seen in the market when they are sell and when there is a decrease in price. So if price moves from, let's say, $3 to $4, like the price of the coin increases, because a red candle is always seen in the market when the price increases, and price moves from $3 to $2. So this place we call the open of the candle, right? Extra place is called the close candle because price went down. And this place represents the lowest point that price went to, and here the highest point that price went to. So this represents the initial place that price was, and this represents the place that price now is, and says price decrease in, since the market went down in price or the price increased. So here will be like $3, here will be like $2 because price moved from this particular place to this particular place. That's why here is called the open of the candle, why here is called the close of the candle. This other place is called the wick, the lowest point that price went to, why this is also the way the highest winner price went to. Now, if you look at the chart, let's make use of this big bearish candle. So just like I said, for this, let's say, for this particular candle, this previous green candle, from this candle, price moved from 2.7406 to 2.77. You can see, so here it's got the open, here it's got the close. While for this particular price moves from here 2.7654 to 2.788. But see this candle shows that price not that in price, and price moved from here 2.784 to 2.7520. As you can see, here it's got the open, here it's got the close because price went down. And from this one you can see price moved from 2.7541 to 2.5886. I believe with this you understand why this call, why here it's got the open, why here it's got the close. Here it's got the open because this is where price was initially, and here this is and the final place that price went to. Understand? So in a bearish candlestick, here is the open, while here is the close. If you understand this particular part of the candle, let me know that in the comment section. And I need this video helpful, to like this video. Now, the next part we're going to talk about is types of candlestick that you can see in the market yet. So, there's candlestick pattern that you see in the market that is going to tell you if price is going up or if price is coming down. And this candlestick we're talking about is called the engulfing candlestick. This first one right is called the bullish engulfing, while this one right is called the what? Bearish engulfing. Engulfing candlestick consists of two parts. You get two candlesticks. Let's talk about this. Let's talk about the bullish engulfing. The bullish engulfing candlestick consists of two candlesticks: a small red candle and a green candle that entirely covers the previous red candle. You can see there are two candlesticks on this place: a small red candle and a green candle that covers the previous small candle, which engulfs. It is called a bullish engulfing. You see this candlestick, it shows that price wants to increase. There will be an increase in price in the market. This will tell you that there were sellers in the market, yeah, there were sellers in the market, but the buyers came and engulfed the sellers. You see this candlestick saying that price pushes forward, that price wants to go up. That's what this candlestick tells us. Now let me look into the charts, show you guys an example of a engulfing candlestick. So guys, as you can see this particular candlestick, right? This particular candlestick, so the price was decreasing down, but as I said, at this particular place, this green candle engulfed this previous red candle. You can see price went up. Okay, if you look at this one right here, there's a red candle, there's a green candle, but this green candle does engulf this particular red candle and price push up. And see, look at this, right? Green candle engulfs the red candle, price pushes forward. You can see that green candle engulfs the red candle, price pushes forward. So if you see any place where a green candle engulfs the previous red candle, it doesn't mean that price is going to push up. If you look more, you're going to find more, a lot of bullish engulfing candle, right? As you can see, this one, green candle engulfs the previous red candle, price pushes forward. Now, let's talk about the bearish engulfing candle, which you can see right here. You should know bearish engulfing candle when the sell candle does what? Engulfs the previous green candles. Remember, in a bullish scenario, this right here is the open, right here is the close. For a bearish scenario, this is the open, this is the close. So you know this is the open, this right here, right, this is the close. Right, for this one, this is the open, right, this is the close. You can see this candlestick is very longer than this previous one, which is that this one engulfs this. Okay, so now let's look into the chart. So as you can see, this is a good example right here. Look at this one, bearish engulfing. This candlestick is longer than this one. It engulfs this. You can see price went down. You can see this one engulfs the price went down. You can see, let me see, you can see this one, this candlestick engulfs this previous one, price went down. So you can see this move, right? This candlestick engulfs this, price went down. And this candlestick, this one engulfs this, price went down. So we can see that a bullish or a bearish engulfing candle tells you exactly what the price wants to see. Normally, if we wanted to buy, but as immediately you see this candlestick, like this candlestick engulf this, so you should just say you can see when this candlestick engulf this, you can see that market went down. Get so this really tells that price is going down. Get, but you should know that you don't trade the engulfing candle only. You must use other technical analysis strategies such as support and resistance, demand, supply, AVGW. Well guys, this next candlestick I want to talk about is called this two candlestick right here. This one is called the hammer candlestick. Hammer, and it looks like an hammer yet, while this is called inverted hammer. Hammer candlestick, inverted hammer candlestick. What does this candlestick tells you? This candlestick actually can be used as a sign of reversal. Since if you see this candlestick, you can tell that price wants to reverse. So this candlestick tells you that, as you can see, this would show the lowest point that price went to. I here show the highest point. You get a hammer candlestick. I'm going to see a small body while a very long wick, long lower wick. That looks like an hammer. So this tells that a lot of slack into this market tries to push its price down, but then buyers came and overpowered the seller and price finally went up yet. So a lot of sellers came to the market and tried to pull the price down to this particular place, but buyers came in and pulled the price up and price finally went up. This is what this candle tells you. While for this particular one shows that this highest point our price gone to, while the lowest point shows that buyers came and tried to pull the price without going up to as as this, but the seller overpowered them and price and went down. That's it. So now let's look at the chart and look for a candlestick that shows like that. So I see this first one right here. I see there is a long wick, long upper wick, and small and lower wick. And see buyers try to pull this power, try to pull this other price up, but the sellers came here and take control, and then some price value went down. And then as you can see this one right here, buyers try to pull the price upward, but sellers came in and pulled the price down, which you can see here. So this candlestick can be used as a reversal candlestick. Can tell you if it will be a reversal. So if you see the inverted hammer at the top of a trend, and see this market was trending up, when you see this particular candlestick at the top of a trend, show that this particular market has gone to the top and price wants to reverse. Then if you see this particular hammer gets at the bottom, which you can see at this particular bottom right here, it shows that price wants to reverse to the upside. There will be a downtrend, and you see this particular candlestick at the bottom, which you can see at this particular place. It shows that price wants to reverse to the upside. You can see. While you see the one at the top, at the top of the trend, shows that price wants to reverse to the downside. So I don't know if you understand. You can see right here the inverted hammer at the top as the price went down, and you can see hammer at the bottom side and price went up. And see from this side price went up. So guys, this identify the hammer and the inverted hammer. Another candlestick that I think you should know is called a doji candlestick. Three types of doji candlestick, but let's specifically talk about this too. This particular one, right, is called a gravestone candlestick because it looks like a gravestone, while this is called a shooting star, a triangle flag candlestick. This candlestick also tells us about reversals. Get so this actually shows that it's also this story is kind of similar to this particular AMA inverted AMA. Get but in this particular one, I notice that the border of the candle is very small, while the wick is much longer. So also it tells that for this particular one, buyers tries to push the price upwards, but then sellers took control and the price really closes at this place until that the next candlestick that's going to form price is going to go down. And this tells that seller tried to push the price downward, but buyers finally took control and the next candlestick is going to form is going to go up. This shows that price is going to go up while this shows that price is going to go down. And should please note in this doji candlestick, either the gravestone and the triangle flag and the AMA or the battle AMA, the color does not matter yet, it's just the pattern that matters. Now let's look at the chart and see if we could spot this. Okay guys, as I can see this pattern right here, this dragonfly candlestick, right, it shows that when you see this candlestick and you see price went up, price was kind of coming down, but when this candlestick forms, price went up. Let me see if there's another one. Okay, this particular candlestick, right, is also a doji candlestick. It shows indecision. As you can see, the upper and lower wick almost has the same length. It shows indecision. If price was going up, if price was coming downward before, you see this candlestick, it shows that both the buyers and sellers are equal in this market and the direction of the price wants to reverse. You can see price was coming down. You know, this is a 4-hour time frame. Yeah, this is a 4 hour. It took 4 hours for this candlestick to form. So you know how heavy the magnitude of this candlestick are looking at right here. As you can see, price was coming down. It was coming downward. If I open this in 1 hour 15 minutes time frame, you will see a lot of candles at this particular place yet. So price was coming downward right here, but as you can see, when they see this candle, when this candlestick was from, it shows indecisions that there will be a reversal as the price finally went up. As you can see, right on this particular one right here, you can see this doji candlestick. Price was coming down, but when this candlestick forms, price went to the upside. Now let's see, it will be another one, right? Again, see right, this particular one right shows that buyers will try to push it upward, push the price upward, but sellers came in and price went down. Yeah, so the candlestick color does not matter. This goes to candlestick holds value or actually work if you see it at the top of the trend. If you look closer, market was trending higher, and when it falls at the top of the trend, you can see there was a great price movement to the downside. So if you see this particular candlestick at the top of the trend, it actually shows that price will eventually goes down. And if you see the other one at the bottom of the trend, it shows that price is eventually go up. So I'm trying to look for a good example because I'm just scrolling the chart, but I think you guys understood. So these candlesticks are good for reversals. They are good at demonstrating reversals. So if you see this particular one right at the bottom of the trend, it shows that price wants to go up. Or if you see this one at the top, it shows that price wants to come down. The every market has been coming down since, and this candlestick forms at the bottom, should there be reverse and price will go up. While in this one, if price has been going up since and it sees it at the top, it shows that will be the end of the trend price wants to come down. So there's a lot of candlestick, but I think this particular ones are the ones you take note of. You should know the bullish and the bearish engulfing candlestick. You should know about the hammer and the inverted hammer and the doji candlesticks. You know about, if you can master this candlestick and be able to identify them easily, I think you are good to go.